Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastep Jr.
Hello and welcome to the Ask Ralph Show. My name is Ralph Eastep Jr. and I do this show every week. My goal is to offer a great deal of advice to you who are listening. I also do a podcast that you can take a look at where you normally get your podcast. Just take a look for the Ask Ralph podcast. And if you're interested in our accounting services, you can go right to my website, which is askralph.com. Now, one of the things I'd like to talk about as we begin the tax season are what are some tips for new graduates? You know, there's a lot of information out there for people who may have filed their taxes before, or, people who are seasoned tax filers. But one of the things I don't see a lot of is a great deal of information for new graduates, that they can use to file their taxes. And there was an article that I'm going to quote here a little bit by the Motley Fool, and it's called 6 Tax Tips for New Grads. And I'm going to take a little bit from it. I'm going to take a little bit away from it. But so there are some things here that they mention that you can really concentrate on, and I think it's a great thing to do. And the number one thing they say is get your withholding right. So that is really the best place to start. When you get your first post-graduation job, you'll need to fill out one of these W-4 forms. Your employer is probably going to give you a whole batch of information or a whole batch of forms you need to complete. It could include an I-9 where you're, attesting to the fact that you're legally allowed to work in the United States. So one of the things they will definitely give you is a W-4 form. And this is a tricky thing because you want to have a sort of a balance, because you don't want to have too much tax withheld and then you get a huge refund, which might sound like a great deal. But the problem with getting a huge refund is that the IRS is basically, using your money and you're not earning any interest on that. It's an interest-free loan on the part of the IRS. So that's not a great thing. But you also don't want to have too little taken out of your pay, and then you might end up owing at the end of the year. And where I see this happen a lot of times with the new graduates is, let's say you might have multiple jobs. Let's say you're just starting out in your career and your main job may not make you enough money. So you go and maybe get an evening job or a weekend job. And what typically happens is you fill out that W-4 the exact same way as your primary job. But the way the tax tables work is they look at your annualized income. So if you're only working, let's say 10 hours a week at job number 2, you probably aren't going to have enough withholding once you add it to your other job. So just be aware of that. So what I usually tell people to do is, if you're working your primary job and you've got your W-4 withholding set up correctly, one of the things you might want to do for your second job is, consider doing maybe like a single zero thing so they withhold the most in tax. The number 2 thing you want to do, new tax tip for new grads, is understand your obligations to the IRS. And the big thing here you need to understand is the U.S. tax system is a pay-as-you-go, which means that you're expected to pay as you earn the income. Now, if you're working for somebody as a W-2 employee, a typical employee relationship, that's not a big deal. You take it out when you get paid. But now if you're doing your own thing, let's say, the big term now is a side hustle. I think it's kind of silly, but that's fine. But if you're doing work as what we would in the trade call an independent contractor, then you need to make sure that you're sending in quarterly tax payments. Now, in general, you need to send in quarterly payments if you're likely to owe the IRS more than $1,000 when you file your tax return. That's sort of the bottom line number. And what happens is when you go to do your taxes, or if somebody like myself does them, which I highly recommend, you may end up paying a penalty because you owe more than $1,000 at tax time. Now that penalty is based on, when you earn the income and the amount of income that you earned. And there's all kinds of rules about, if you filed a return the previous year, that sort of thing. But, if you think you're going to owe, then it might make a lot of sense to go ahead and make those quarterly payments. Number 3, we're talking about recent graduates. Don't forget to claim your student loan interest deduction. If you have student loan debt, you should be eligible to deduct up to $2,500 of interest you paid on your loan. The key to this, you need to be legally responsible for paying back the loan. You can't be a dependent on anyone else's tax return. You can't file your taxes and married filing separately. So there's a couple of obstacles you need to get over. And the married filing separate thing is really pretty interesting, because I've run into some clients that, maybe they're on the outs with their spouse or something like that, and they end up filing a married filing separate, and they're very disappointed to find out they can't take their student loan interest. The only other issue you have there is a bit of a income limit in claiming student loan interest. So if you have over a certain amount of income, then you're not going to be able to claim that student loan interest, which really is a bad deal, because in my practice, I've seen people who are actually, maybe physicians or something like that, and they're not able to take that student loan interest deduction because their income is too high. Now, in order to take that deduction, you will get a statement. Now, in a lot of cases, that statement will come to you maybe electronically. They might not mail it to you. So be on the lookout for that, whoever your student loan processing company it is. Now, number 4, and this is a big one, and I've talked about this a lot on the show before and in the podcast. And if you want to go back and listen to those, you can go right to the Ask Ralph podcast site. You can go to iTunes or the Google Play Store, and you go and look at all those other things that I've done before. And there's a lot of information out there, but the key is start taking tax deductions for retirement. This is a big deal. If you start off earlier, the better off you're going to be. And listen, if you're lucky enough to be covered by a 401k plan at work, you can take up to $19,000 in 2019. Now, that's ideal. Now, you may not be able to afford to do that, but that is the max. Now, if you're not covered by a traditional, like a 401k plan, then you can put money into an IRA. There's a $6,000 limit for an IRA, and if you're over 50, then the 401k limit goes from 19,000 up to 25,000, and the IRA goes to 7,000. And the cool thing about these can be deducted even if you don't itemize on your taxes. So what does that look like? Well, here's a great example. If let's say you're in a 22% tax bracket and you contribute $6,000 to max out your IRA, you will actually save $1,320 on your federal tax bill. And if you're a new grad and make this $6,000 contribution at age 21, that $6,000 will be worth more than $118,000 at age 65, assuming a 7% rate of return. And the last thing here is keep your tax paperwork together. And this is something that you really just need to pay attention to. You'll probably get lots of tax paperwork in the mail. You might get W-2s for any employers. And that's another thing. Like, let's say you're a recent grad and let's say you work for a couple different jobs. You're going to get a W-2 from each of those jobs. So you want to keep an eye out for those things. You may also get 1099s if you're doing any side work. You're going to look out for your student loan interest deduction. You may have had a partial year of education, so you're going to be looking for a 1098 from the institution. All this paperwork can be overwhelming. So you might want to think about, going meeting with somebody like myself. I mean, there are tax software options. In this Motley Fool, they talk about, find a good tax filing program. I'm not a big fan of that because I just feel like those things will talk you into deductions that you don't deserve or make big problems for you. So if your tax return is complicated, you definitely want to sit down with somebody like myself. So I hope this was helpful. If you're a new grad, welcome to the working world. You'll be doing it for many years. So just keep these things in mind and it'll keep you out of problems with the IRS. But like I said, the key to it is start putting money into that retirement plan right away because it's just going to grow and grow and grow, and sooner the better.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.